It's striking that some of these companies have been private for many, many years. They used to be companies would be private for 5 years, and then go public. But now I'm seeing companies that are private 10 years, even 15 years before they go public, and they're still private here. So tell us a little bit of what kind of opportunities are available for people who want to buy or sell private securities, and what are you doing to help that?
So, I mean, that's a great observation, Bob, and I'll tell you that there has been a massive paradigm shift, obviously, within the industry, and I would say that's now the norm, right? So you're seeing companies stay private 10 to 15 years because you've had a handful of the largest buy-side investors getting involved, injecting cash and liquidity into these companies at very early stages. We're talking B and C rounds. And at that point, they no longer need to go to the public markets for liquidity. And so, again, that new trend that we're seeing, and as we say down on the floor of the exchange, a trend is your friend, is companies are staying private longer. And so having access to that and thinking about how to democratize the process of investing is something that's very important and is on our mind quite a bit, as we know that the regulators are looking at it very, very hard. And as the regulatory dust settles, we want to find ways to
explain how this works. So right now, under your company, if I had shares I wanted to sell, I would go on the platform and seek a brokerage company. You'd go through the brokerage company, right?
That's right.
And then the company you still need approval of the company itself.
That's
right?
Exactly right. And again, it's a great point. There's a lot of snafus in investing in private companies. It hasn't been electronified the way investing in public companies has. You can't hit the button and buy shares in a millisecond the way my algorithms that we built in the past have done. Today, this process could be very long and arduous. It could be days to months by the time, and again, by the time you get in front of the companies to find out if they are going to ROFR those shares. And the ROFR is the most important part of the process because it seems to be the most...
ROFR meaning?
ROFR meaning the right of first refusal. And so to your point of the question, which is those companies have the right, if I were to go to them as an early employee and say, I'm about to sell my shares for $20 to someone, they can say, we have the right of first refusal to say, no, we'll pay you the 20 and take those shares back, whether into Treasury or for whatever reason.
This is still a pretty antiquated process. It's really like an over-the-counter transaction, essentially. So if I'm at XYZ company and it's been private for 10 years, not going public, and I own 10,000 shares, pick a number, and I want to sell 1,000 shares, it's actually fairly difficult to do that right now. You're trying to find some way to not automate the process, but do more electronic kind of trading.
Yeah.
But you still have to get the approval of the company, and you still have to have selling shares. You still have to get the company approval. And you still have the fact that this has to be a qualified individual, right?
That's exactly right. And so there's a number of different checks you need to go through. And today it is extremely antiquated and high touch. And that is the reason that InvestX exists today, is because our very ambitious goal, while ambitious, we don't think it's impossible. It's not, this isn't rocket science. At the end of the day is figuring out a back office rails so that when you want to make an investment, or if there's a ROFR process, that it can be automated / electronified. And that's very important.
So is there an ETF angle here? So, for example, could you ever envision a process whereby you can actually get private companies in an ETF as a group and trade it as a group?
Funny, I had just a meeting this morning with one of the largest ETF issuers out there who is very aggressively seeking to do exactly that, which is build an ETF around private companies. And if you think about really the larger U.S. consumer, the larger swath of the consumers who are not accredited, today have no access to private companies. And the SEC has inadvertently made the rules, such as what their definition of an accredited investor is, have inadvertently made it very difficult for the masses, if you will, to invest. And so we believe that's kind of where the puck is going, not where it's at. And there are specific ETF issuers who are seeking SEC approval to come up with ways in building baskets around private companies.
Kathleen, what's your take on this whole thing? Number one, what do you think about the ability should people have an ability to buy or sell shares in a private company, as Brian is essentially trying to set up? And why are companies staying private so long? It used to be 5 years, and with the venture capital, they want it out. Now I see 10 years and more with venture capital firms.
Well, we would comment that in the private market, I think the most important thing for all markets to work well, it's kind of like the Amazon. The more information you have about what you're buying and selling, the more transparency, you have a better marketplace. And that's why I think the IPO market has worked so well. There's a requirement for disclosure, audited financials, and stuff like that. So the more that Brian's efforts enable investors to access with good information, then I think the growth ought to be there, and I think it's a noble effort. I myself think that the SEC should get rid of the accredited investor rule. It doesn't seem to make any sense to me. Investors can know what they're doing. So I think that it's a good approach. I would say that in answer to why there's so many companies that have stayed private, back during the Jobs Act, the SEC put in a regulation, or relieved a regulation that said if you had so many shareholders, and it was I think 500, you then had to go public, because basically once you have that many shareholders, you effectively need to tell them what do the financials look like and stuff like that. Well, they extended that number to like over 2,000. And so that enabled companies to stay very big and not to go public. And okay, that's fine. We're in a point in time right now where there's a lot of capital available.
Yeah.
And
Right.
it makes it easy. But remember, there are times when we know the IPO window can be closed and capital is not available.
Right.
And it's important for companies to get the fact that they have traded shares, liquidity can really give them a benefit of being able to use that stock to raise additional capital, to make acquisitions that they would not have if they stayed private.
Right. But other than the change in the SEC rule with 2,000 shareholders, isn't the simple answer that capital is really cheap and it's easy for these companies to stay private? Why bother going public when your venture capital firm, you'll do a series A, B, C, D, E, F, G, H. We've gone through the alphabet with some of these rounds of funding that are going on. Why go public when you could get cheap money for the rest of your life, essentially? Isn't that the real answer?
Right. And the equations sort of flip-flop, because generally speaking, these valuations should not be as high as they are. I mean, we've seen a lot of IPOs that are done at valuations that are lower than their last rounds.
Right.
So the fact that capital is running to these companies, it's not the best formula, but look, we've been in all kinds of markets. Markets adapt. That's what they are.
Brian, what about access to information that Kathleen was talking about? Today, if you want to invest in a private company, it is really hard to get information. She's right. It's
nearly
you used the word asymmetrical.
Yes, and that's exactly what it is.
So what are you going to do? How do you make it possible?
Right. So when I say asymmetrical, only from the sense that the larger investors that we spoke to earlier, involved in those earlier rounds, do have access to the company's financials or otherwise. And so, again, Kathleen brings up a great point, and as we're sitting here in this great institution that once had a point of sale, which, not to the extent that it used to be, but again, price discovery is a big part of the challenge for investors in private companies. And so that's another one of the things that we try to provide on our platform, which is access to financials, albeit some of it publicly sourced, but others that we gain access to directly from the companies, and after ascertaining that, put that on our platform for our broker community and our broker partners to share with their customers, and so that they can make more informed decisions in their investments.
Yeah.